What happens when the world's economic compass swings from globalization to mercantilism? This is not a hypothetical question, but the very reality we're experiencing today. This shift has been particularly evident under the Trump administration, marking a significant departure from the globalization trend that dominated the last few decades. Nations, now more than ever, are prioritizing national interests, trade surpluses, and strategic control over supply chains. If history serves as any guide, this shift is not an anomaly, but rather a reversion to long-standing norms. Michael Every, a prominent figure in this discourse, draws a clear line between economic policy and economic statecraft. Where economic policy employs technocratic tools like interest rates for domestic goals, economic statecraft wields these tools like a sword for geopolitical power. Think tariffs, subsidies, and manipulation of financial systems to influence global dynamics. Yet market participants seem to be caught in a fog of exhaustion and denial, leading to rampant inefficiencies. Systemic risks, such as existential threats to nations like Canada or Europe, are being swept under the rug, setting the stage for potential violent repricing once the harsh realities materialize. Let's take a closer look at some regions. Europe, for instance, teeters on the edge of existential risk due to military underinvestment and a dangerous reliance on US protection. Canada and Greenland, on the other hand, are strategically vulnerable. Canada's economy could crumble under US tariffs, while Greenland's resources and location make it a tempting target for US expansion. And then there's Russia and China. Russia's wartime gains and potential reintegration into global systems could dramatically alter power dynamics. China, with its mercantilist model, might face challenges as other nations adopt similar strategies, risking zero-sum global trade conflicts. These shifts and changes could lead to extreme market volatility. Defense stocks, energy, and sovereign debt instruments are particularly sensitive. Traditional metrics such as CPI and unemployment are proving insufficient. Investors must now analyze geopolitical strategies and prepare for non-linear impacts. Diversification and geopolitical awareness are now more critical than ever. To sum it up, the era of predictable globalization is over. Investors and policymakers must adapt to a world where economic tools are wielded as weapons in national power plays. Vigilance is crucial, and resources like Rabobank's research and updates on US economic statecraft are invaluable. The key takeaway here is simple. Geopolitical awareness is now critical for financial resilience and capitalizing on emerging opportunities.